G, making moves, flipping real estate. We building wealth, get your minds right and elevate. It's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jewelry show. Wealth building equity in real estate, the mission. Collaboration is greater than competition.
What's going on, y'all? Matt Garland here, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Happy Friday. I hope all is well. It is May 6, 2022, and I'm coming back to you guys with a quick market update. So make sure you guys like, share, comment on this video, share it with your community. All right. So let's get right into this. I'm not going to spend too much time on this topic today. Thank you guys for checking in with me today, as per usual. All right. So let's get to it. The Federal Reserve, the Feds, they raised the rates half a point. All right. And in June, they raised a half a point this week. And in June, they may raise it another half a point. The Feds, what they're trying to do is they're trying to cool off the demand by making things more expensive and trying to taper down inflation. I think personally, they are doing this the wrong way, although I know they have to do it because, in my opinion, it's just going to make things even more expensive for the people. Now, a lot of people have been reaching out to me in my DMs, in my comments, emails, text messages. I'm speaking to clients, realtors, the whole 9 yards, and everybody has fear right now of a recession. We see what mortgage rates are doing. Earlier this week, I came to you guys with a market update about mortgage rates, just so you guys understand mortgage rates since that last video have went up again. So right now, today's national average on mortgage rates is 5.625%. We're at the highest levels of mortgage rates for a 30-year conforming mortgage with perfect credit, 740, 760 or higher. This is the highest it's been since 2019. All right. So people are obviously scared. People have fear right now, and rightfully so. Right. A lot of you who just got into real estate or, haven't really owned a home yet, you're seeing what the rates were 2 years ago. Hell, what rates were 3 months ago, and you're seeing this jump, and it's a culture shock. When I came to the business, I tell you guys all the time, interest rates were 7%, 8% when I first came into business. I tell a story all the time that when I purchased my first home, my first mortgage was above 7%, and that was on an adjustable rate also, right? So a lot's happening in the market. Obviously that's making affordability, making it a little bit less affordable for folks to afford their mortgage payments, which I definitely understand. Buyer demand is definitely going to drop because of interest rates. And then also what's really hurting are current homeowners who probably had the opportunity to refinance during the pandemic, aka the bandemic, and didn't take advantage of it, right? A lot of you guys are now out of the money. There's no reason for you to refinance because you already probably have a low interest rate. Now, I'm not saying there are not still opportunities out there for folks to refinance, like doing debt consolidation, home improvements, things of that nature. But for the majority of folks who purchased a home or refinance in the past couple of years, obviously, there's no reason for you because you probably have a rate that's 3% or lower, right? So what people have been coming up to me is saying to me, Matt, the market is about to crash because look at interest rates and look what the Feds are doing. Well, I'm here to tell you that's not going to happen either. Yes, I said it. The market is not going to crash. The real estate market is not going to crash. There will be a correction at some point. That correction will not happen this year. Let me go on record and say that too. And there's numerous reasons why. And I'm going to go through that in 1 minute. But I want to tell you guys, if you did not know this, right? Just so you know, in the last 8 of the 9 recessions on record, there's only one time that the housing market declined during the recession, and that was the Great Recession, the subprime market crash. All right? So please understand that. Traditionally, when there's a recession, and what the data shows, I'm not talking to you about my feelings. I'm telling you what the data shows. The data shows 8 out of 9 recessions, housing actually appreciated. Now, obviously, housing has exploded over the past couple of years because of COVID, and supply and demand issues. You know, home prices are up 20+% every single year since the pandemic, since 2020, I should say. Let me stop saying the pandemic. Since 2020. All right. And what's also up is rent. Rent is up 20% also at the same time. So when I hear folks keep asking me, rightfully so, Matt, should I buy or should I wait? I'm always going to tell you the same thing. Don't wait to buy real estate. Buy real estate and wait, because real estate is a long-term play, ladies and gentlemen. You have to get out of your mind that this is fast and quick money. Real estate will always go through cycles. It will always go up. It will always go down. Mortgage rates will always go up. Mortgage rates will always go down. This is just part of the game. Okay. And you have to understand that. So either which way, you have to pick your poison on what you're going to do. Is it going to be better for you and your family in your personal situation to go out here and buy a primary residence in this market? Can you afford the mortgage payment and all the expenses that come with it? If you can, yes, please go ahead and buy real estate. If you cannot afford it, if you cannot afford the maintenance of the property, do not buy it. And that's the same thing that goes for investing, because we all know these tenants are not guaranteed to pay us a dollar. So if you cannot afford to pay for your investment properties, the debt service on them, please do not go out here and invest your money, because you will lose your property if these tenants are not paying you. All right. So let's get that out the way. A recession does not necessarily mean there's going to be a housing crisis. All right. Now let's go through some numbers real quick. Right now, obviously, I'm gonna have to look at my notes because this is a lot of information I'm about to give y'all real quick. All right. Let's talk about this, right? And we're gonna go over, because a lot of people just don't understand supply and demand. And that is the number one indicator for me. There's two things that I'm looking at. I'm looking at homes on the market. How long have these homes been on the market? And what is the number of months of inventory? So if you don't know, when you're less than 6 months of housing inventory listings for sale, that is a seller's market. Anything above 6 months, it's typically a buyer's market, right? There's a more supply than a demand. Now, when you in the current market, I lost a train of thought. Sorry. So in the current market, we are less than 2 months of inventory nationally. And in some markets, they're less than a month of inventory. It's absolutely insane right now. So what you guys don't understand is what's happening with these high interest rates. We still have the same supply issues with materials and things of that nature. Okay. That's not getting better. That hasn't increased. Hell, try to order some furniture today. Look how long it's going to take you to get furniture, right? Things are not back to normal pre-COVID. Builders can't get material fast enough, and it's more expensive for builders. These are all supply issues that's going to impact the housing market in a way to where homes are going to continue to appreciate. So let's look at the last 4 weeks, right? The median home price sale is up 17% year over year. Think about this, guys. Interest rates have increased over the past 3 months, but we're still saying the median home sales price is up 17% year over year. It's at a record 396,000 for the average medium home sales price right now. Absolutely insane, right? The median asking price of newly listed homes increased 16% year over year to $408,000. That's another all-time high. These are things you got to pay attention to, right? These are still going up. Now, obviously, monthly mortgage payments are higher because interest rates are higher. We know that, right? This is an important stat that I want to tell you, and goes back to my supply and demand thing that I was just talking about. New listings of homes for sales were down 6% from a year earlier and have been down since March of 2021. I'm going to repeat that. New listings of homes for sale were down 6% from last year And active listings, the number of homes listed for sale at any point during the period fell 18% year over year. Ladies and gentlemen, do you understand what is happening right here? There are no homes going on the market. Please understand, this is contributing. When these numbers are down, new listings coming to the market is down 6%. Active listings are down 18%. That's the supply, right? There's no homes for people to buy. So how will there be a market crash if there's no supply? This is just common sense to me, right? Now, check this out, right? 56% of homes that went under contract in the last 4 weeks had an accepted offer within the first 2 weeks on the market. That's up 54% from last year. That is crazy. Absolutely insane, right? Absolutely insane. 42% of the homes that went under contract had an accepted offer within 1 week of hitting the market. That's up 41% from a year earlier. Homes that sold on the market for a record low medium of 15 days. That's down from 21 days on the market from a year ago. Let me stay right here. Now, this is data over the last 4 weeks. This is data from the month of April when rates were already at 5%, guys. Please understand what I'm trying to tell you right now. Homes that were sold were on the market for a record low of 15 and a half days compared to 21 days a year earlier when the interest rates were 2 to 3% lower. So with these higher rates, people are now doing what? They're more aggressive to buy because they don't want to get priced out even further than what they are. That is increasing more demand on the little bit of inventory that is still out here. You got to pay attention to the stats and stop listening to these people on the internet, because most of these people are just giving you guys clickbait information to get you to click and watch their videos, et cetera, et cetera. Please do your own research. Even research the stuff that I tell you. Do your due diligence. All right. Check this out. A record 56% of the homes sold above list price, up 47% from last year, up from 47% a year earlier, I should say. So I'm going to repeat that. A record 56% of the homes that sold in the last month, they sold above the list price. That's up from 47% last year. Insane. Insane, right? So look, what's going to happen with the Fed raising rates, with interest rates going up? Why would a seller put their house on the market right now? Think about that. Really think about that for a second. If you had a house, especially if it's your primary residence, because most people are looking to sell, they want to make their money and they want to upgrade or they want to downsize. But if you know, number one, if I'm a seller, if I don't have to sell, why am I going to sell my house in this market just to get this money where I may not even find a place to live, and my interest rates are going to be much higher, and the house that I'm going to buy is probably going to be more expensive? So why am I going to rush to sell? There's really no benefit. In the past 2 years, there was a lot more benefit for these sellers to list their houses because interest rates were cheap and they still were making money. But we still had the same issue that we have today, which is the supply. Look, the numbers are the numbers, ladies and gentlemen, and I'm not here to sell you guys no dream. Look, whether you buy a house or not, it's not going to impact me one bit, because I am still going to personally go out here and buy real estate because I believe in real estate for numerous reasons: for long-term generational wealth, for tax shelters, et cetera, et cetera. So if you're in the market right now and you want to purchase a home, stop listening to everybody on this damn internet. Figure out what your goals are, what you're trying to achieve. If you're looking to buy investment properties, focus on cash flow. Focus on your long-term goals. Stop thinking about the short term. Should I wait? Should I do this? If you're in a financial position, Go ahead. What are you waiting for? If you want to wait for this so-called market crash, God bless you. Wait for this market crash, and hopefully things will work out in your favor at that time. I'm not here to force you guys to buy real estate. My goal, I am a home ownership advocate. I believe everybody should, especially black and brown folks, we need to own some ish, like my girl Aisha Selden would say. But ultimately, it's ultimately your decision what you guys want to do. So that's my kind of rant right now. The recession, and apologies, I don't know. I thought I turned my phone off, and my phone just don't want to shut up today. But what I'm trying to say, you guys, yes, will there be a recession? Absolutely. Will there be a correction at some point with real estate? Absolutely. And before I finish my thought, do you understand that all the economists in housing, they're still predicting that home prices will appreciate at least 10% this year? I said earlier on my Instagram, I think it's going to be more to 7 to 15%, depending on the market and where you are. So you add that in from 2020 to 2021 to this year. I mean, going into 2023, we might be up 50 plus percent in the past 3 years. So you have to really look at all of this, right? Are you going to continue to wait for this quote unquote crash? Even if there is a market crash, if home prices depreciate, let's just say 25% depreciate in a year or two, it's still up 25% from 2019 when the pandemic started, right? It's still up. You're still buying at a higher level, regardless of what, because everybody wants to go back to pre-COVID, right? But I don't think most of you understand 2019, 2018, the housing market was on fire too. Not at these levels, no. These were unprecedented times, unprecedented measures, but it still was up and it's stuck. And my personal opinion is that it's going to be continuing to be up and it's stuck, regardless of what. Normal appreciation is usually around 3%, 4%, 5% in the market. When you at 10%, that's incredible, right? Now, 20%, 25%, some markets hit 30%. Austin, Texas is ridiculous with the prices. Nashville, all these markets have experienced. I mean, Atlanta, Georgia, ridiculous appreciation over the past couple of years. Shout out to Kiana Watson, my co-host of Rants and Gems, right? She's selling everything above asking. You know what I'm saying? Like, they're killing it out there. But I personally am trying to tell you guys, stop focusing on a recession and focus on making yourself recession proof. If you cannot afford at these levels, right? If the interest rates, if you are one of these buyers, and this is my advice to you guys before I wrap this up. If you are one of these buyers who cannot afford today in today's market, high prices, high interest rate, it's unaffordable. I need you guys, and especially if you have the capital, right? Maybe you want to buy in Atlanta and your price point was 400,000 and you can't find nothing. Everything you want is 600-700. Focus on investing that money, right? There's a ton of middle markets in America, Cleveland, Alabama, Milwaukee, tons of places out there where you can take that money and go invest it and get cash flow to increase your income. So instead of worrying about can you afford your primary residence, right? Focus on trying to invest that money to increase your income. We as a people have to stop worrying about things that we cannot control. We have to focus on the things that we can control. And how much money you're making, you can absolutely control that. In this day and age of the information and technology that we have available to us, we need to focus on increasing our income and ultimately making ourselves recession proof, right? Shout out to him 500. So this is what I want my people to do, right? Create that pathway for yourself to be able to afford if you can't afford right now. What exactly do you need to do to increase your earnings? We all have that intellectual property, ladies and gentlemen, to do this. All right. You just got to think outside the box, do it the legal way. You understand what I'm saying? And go for it. Don't relax on it. Be aggressive with your goals, because if there is a crash and if there are opportunities that come up, you need to put yourself in position to be able to win and capitalize on it. Sitting here on the internet, listening to all these people, listening to your coworkers, blah, 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 that ain't going to make you no more money, ladies and gentlemen. So you got to figure out, how do you make more money? If you want to get in real estate and you can't buy investment properties, why don't you go get your real estate license? Why don't you go get your MLO license, right? Focus on picking up skill sets and licenses where you can increase your wages. All right. So that's all I got to say on this topic. If there is a recession that's going to happen, a recession does not mean a housing crisis. 8 out of 9 of the last recorded recessions, the housing market increased. And if you didn't know, now you know. My name is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.
It's Matt G, making moves, flipping real estate, building wealth, get your minds right and elevate. It's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jury cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.